Morning, everyone. Thanks for taking the time out of your day to join us. Webinar we've got today is new tax year, new you, top tips for limited companies to get everything on the straight and narrow now that we're at the start of a new financial year. So, I'm Ben Schaefer. I'm the sales manager here at Crunch. So I'm responsible for bringing on all of our new clients, advising them on what kind of approach might be best for them in their situation. And then joining me answering all your questions is going to be Luke. So Luke's client manager here at Crunch, supports a number of clients, answers all their questions, manages their account for them. So thanks for joining us, Luke.
No problem.
So let's jump straight into it. Today's webinar, like I said, new tax year, new you, top tips from Luke to get your account in order. If you're a Crunch client, be really valuable information. If you're not a Crunch client, might give you a little bit of insight into the kind of support that someone like Luke would be able to give you if you wanted to join. A couple of bits. There's a questions, like a thing in your widget where you'll go to webinar widget where you can ask questions of us. So at any point through the webinar, click in there, ask your question. We'll try and get to it at the end. We'll try and answer some of them live. If we don't get to your question, we'll follow up with everyone after the webinar with all the answers to all the questions. We're going to give you some further reading as well. So we'll send you out some links to guides, articles within the Crunch website, which we think could be kind of good takeaway reading. So let's jump straight in. Right, Crunch, for those of you that aren't a client of ours, is an online accountancy firm. So we were started back in 2009, and we really wanted to change the way that accounting was done. So moving away from that classic, face-to-face accountant, moving to a more an online subscription service where people don't need to go and see someone. We now cater to over 10,000 accounting clients, and we really are, challenging what it means to be an accountancy firm. Alongside that, though, we've also got other products that we offer too. So things like mortgages, business insurance, investments, and pensions as well. So now that we know a little bit about Crunch and how we work, let's think about top tips from you. So first of all, you've got your P11D.
Yes. So P11D is incredibly important. It's for any benefits in kind, and what that really means in basic terms is anything that you personally benefit more than the business from.
Okay.
So for instance, things like a company car, maybe health insurance, private medical care, eyewear, for example, eye tests, that sort of thing, staff welfare, in essence. Now the P11D, it has to be filed by July the 6th. And you actually have to file this before completing your self-assessment. Now, with Crunch, it's actually really straightforward because all the information that is presented in the account automatically feeds through onto the P11D. So you don't have to work out which needs to be on it, what the portion of NI is going to be, the national insurance itself. So it's actually critical that as long as you're keeping your account up to date, then all of the data will be presented on that P11D, so you can just submit it. And it is just as simple as clicking a button.
Okay, perfect. So I guess that's one of the kind of overarching tips, isn't it? Is to make sure that everything's up to date and, kind of little and often, as we often say around here, the more you can do it, the better.
I mean, I can't stress enough how important it is to keep your affairs in order.
Yeah.
Can't stress it enough.
Setting aside enough tax. So this often comes up and people want to know, before we start, what do I need to be putting aside for my personal tax, whatever it might be? How can people best do that? What are your tips there?
Well, first thing to do is separate your business and your personal funds entirely. Keep them as far apart as possible. You need to know what your business taxes are and also what your personal taxes are. So Crunch actually has a tool online that's downloadable for everyone. You don't have to be a Crunch client at all. It's a personal tax calculator. So for instance, what you could use this for, and a handy tip that I always say, is as and when you are issuing your dividends to yourself or your other shareholders, include that data on this spreadsheet so that you're always giving yourself a live run throughout the year of what your tax liability is going to be. So at least then you know, right, this is what I have taken from the business, but I need to set aside this amount of money to pay HMRC come self-assessment.
Okay, perfect. because when in the Crunch account itself, you can see how much corporation tax that you owe in a live state. So this is a good place to be able to having them both kind of running at the same time, right?
You can, yeah. I mean, the Crunch account itself will give you live visibility over your business taxes. So it will portion off your corporation tax, your VAT, etc. It doesn't, unfortunately, keep a live run on the account of your personal tax. And that's why I will advise you, if you do want to keep that sort of record, download that calculator and use it.
Perfect. So contracts. So when people come to us, you know, at this initial stage, people are always asking about contracts and, you know, what should I be putting in a contract? It's always really best practice to make sure that you have clear terms of business. Now, we can't really advise them what legally should be in your contract, but we can potentially get you thinking about what, you know, you might want to consider, right?
Yeah, absolutely. I mean, first thing importantly is think about your payment terms. So what I mean by this is when you actually want to be paid by your client. Obviously, as a freelance contractor, you have the flexibility to determine that yourself. That's entirely your choice, whether you want to give them 7 days, 14 or a month. That's entirely up to you. Crunch has triggers in the account so that you can set up automatic reminders for your clients. So when it gets to a certain sort of point in the month, it will send an email to your client just as an FYI, payment is due by X and X date. If, of course, that fails and you don't receive the payment by that date, you do have late payment reminders also that you can set on triggers. So again, this is done through the software. They go out automatically. Again, you can determine whether it's daily, weekly or monthly if you want to give them that amount of time. Obviously, when you are then getting into the tricky territory of they may not pay me, that's when you need to make a conscious decision of, right, how do I want to take this further? You know, do I want to get somebody else involved to chase up the debt, or do I do this myself? My advice is always try and liaise with the client first. It's always best just to keep that business relationship stable. If you want to continue working with them as well, it's always better to chat with them about it, just get an understanding of each other, where you both stand. But as I say, if all else fails, there are things that Crunch offers, like Crunch collections, for example. As Ben said, it's very legal based when it comes to contracts. So if it does get a bit more murky than that, there is other companies such as Lawbite that you can get advice from how best to handle it.
The other note that we've got there is an IR35 review. It's a pretty hot topic for all contractors, particularly that use our services. So that is something that we can do here. You know, we can look over your contract from an accountancy perspective, give you feedback on changes or alterations that you may need to make to your contract from a strictly kind of accountancy perspective. So, you know, if you are a client, you're worried about that, you know, get in touch with Luke and he can start pointing you in the right direction of getting an IR35 review if you need that as well. So we've just come to the start of a new kind of personal tax year. People probably have just, you know, recently, end of January, filed their self-assessment. Now we can start thinking about how can we make the next self-assessment a bit easier, right?
Yeah, 100%. I mean, for those that don't know, and if you're not a limited company already, self-assessment is a declaration of your personal earnings. So that consists of things like salary, dividends that you're withdrawing from the business. You have to tell HMRC what you are taking from that company. It is a legal requirement. So if you miss this, HMRC do impose fines and penalties, and they're not nice. They are quite hefty. Every director and shareholder has to complete a self-assessment. And that's, to be honest with you, that's regardless of even if you haven't withdrawn anything from the business. It just needs reporting. So just think, even if, you know, it's very easy to naturally assume, well, I haven't withdrawn anything from the business, so I don't need to do one. That's not true. That's a myth, an absolute myth. You have to report it, even if it's just zeros on form.
Right, so expenses. Everyone's always pretty keen to claim their expenses. I guess what we want to know is a couple of things that we can claim and what's the best way to be claiming them.
So this is obviously one of the most sought after things, what you can and can't claim for. In reality, it's your business. You claim for whatever you want to claim for at the end of the day. My advice is a good way to look at it is it wholly and solely for business purposes? If there's any element of doubt in your mind, should it or shouldn't be, get in touch with us, because the last thing you want to do is give HMRC any reason to investigate why you're claiming for this. Now, we can't tell you not to claim for something. It's actually down to the director to then prove and evidence that this is a business expense, but there are some very simple quick wins, I suppose, that you can claim for. So food and travel, for example, obviously your to and from journeys, business mileage is another, and that doesn't matter if it's a car, bike, or a bicycle, it's all allowable. Obviously there are a lot of other things that you can claim for, so things like subscriptions, insurance, software, cloud, web hosting, that sort of stuff. If you are in doubt, then just give us a shout, you know, ask for me. Any of the client managers here is trained to tell you that sort of information. But as I say, it's important that you're just able to justify why you've put that through.
Sure. And how long do people have to keep all these bits and bobs for?
6 to 7 years. Right, okay. 6 to 7 years. Now, you haven't got to do anything extravagant with them. You haven't got to laminate them or anything like that. Just find yourself a shoebox, get a filing cabinet, whatever you want to sling them in, chuck them in there. And if HMRC do decide that they want to double check your expenses, send them your shoebox and they can work.
So it doesn't need to be in an order, it doesn't need to be filed, it just needs to be together.
No, you haven't got to date it, alphabet it, nothing. Just keep them together. That's it.
All right, great. You got some more bits on here that you want to tick off?
So generally good rule of thumb is to put your business expenses on the business card. Because when you're going through your accounts, you have clear visibility of what you have spent, what you're spending your money on. Sometimes though, there are going to be scenarios where perhaps you've forgotten your business card. Now that leaves you with no option but to use your personal. Again, perfectly fine. The most important thing if you are going to use your personal card is to keep that receipt. If you don't have the receipt or you lose the receipt, you cannot claim for that expense, unfortunately, just because we don't reconcile your personal bank statement. So the only evidence we have is the receipt itself. You can also do things, I suppose another sort of tip, I suppose, with personal expenses, because you don't reconcile them, if you have used your personal card for a week, you won't have to individually enter those expenses day by day. You can do it by category. So for example, if you've gone through that week and you've spent £100 on travel, in that case, you don't have to do the daily charge. You can, at the end of the week, enter the expense on the Friday and say, this week I've paid £100 on travel.
Sure.
That's it.
So just make sure you're doing that weekly, I suppose.
Yeah, weekly by far. It's a bad habit to do it on a monthly basis. A, because you could forget some things, and B, if you leave it a month, you might actually maybe misplace some of the receipts, and you can't claim for it then. Okay,
sure. Now, salary. When people come on board with us, I know that we generally advise it's more tax efficient, or that's the the advice that everyone knows of. It's more tax efficient to have kind of a salary and dividends structure. So what do people need to do with their salary?
I mean, ultimately, it's the most popular question we have here is, what can you earn as a limited company, and how is it more efficient? Our advice, generally speaking, is to take a low salary combined with the dividends. Now, the salary that we recommend is actually the NI and income tax threshold. So for this tax year, for 18 to 19, you're going to be able to have £8,424 for the year. So that works out to £702 a month. Admittedly, no one can survive on that sort of money for a year, so you are going to have to give yourself dividends. The reason we say this is because the 8,424 is tax-free, and dividends are taxed very differently to your national insurance and your income tax. Obviously, for more bespoke advice, and if you want some advice tailored to your specific circumstances, give us a shout. Yeah, and we can work it all out.
I suppose that kind of ties nicely onto dividends.
Yes, it does. Yeah, as I mentioned, every circumstance is different. There's lots of variables when it comes to dividends. You have to consider things like external income, things like rents. If you've been perhaps a sole trader or self-employed partway through the personal tax year, that's going to impact it as well. Again, you need to get in touch with us to get the exact specific advice, because whilst I could sit here and say the bracket is such and such for this amount, that's not always going to be the case for everyone.
Sure. So just get in touch. If you've got any questions of your client, or, if you just want to chat to us in terms of coming on board before and you've got some questions, get in touch with me and my team.
Yeah.
So top tips for people that use Crunch already.
Always keep records up to date.
Okay, right.
Always. With cloud-based software, it's really difficult, unfortunately, to provide advice to clients or anyone in particular, to be honest, if the records are out of date.
Sure.
Whilst you can get generic advice, it's not going to be personal. It's not going to be specific to your situation. So keep your records up to date. It gives everybody far more visibility over where you stand. What's more than that as well, it enables you to financially plan as well better. So you know where the business is, what your position is, what tax liabilities you have. The other good thing with Crunch as well is if you do use us, we have bank feeds. So what I mean by that is automatic bank statements uploading into the Crunch software. Now, there are only specific banks that we have this integration with. But again, to find out what those banks are, just give us a shout. You know, I can mention Metro Bank, for example. They work really well with Crunch. But there are some others, so give us a shout if you want to find out.
There's other apps and stuff that your clients use as well.
Yeah. You got Snap, which is an expense uploader. There's two versions of it though. So you've got a free version which allows you 15 uploads per month, and then you have an unlimited version which you can use to your heart's content. Other things we have as well, actually touching down on the apps with things like business mileage and expenses. There's an app called Trip Catcher, which you can download on iOS or Android, completely free. For lack of a better term, it's almost like a stopwatch. So you get in your car or your bike or whatever you've got, start it, get to the end journey, stop, and that will give you the miles that you've done. You multiply that again, you get up to 45 pence up to 10,000 miles and 25 pence up to 10,000 miles on bicycles.
So it works on car and bike.
Yeah. Great. Absolutely fine. I would probably say if you keep in this sort of fashion, if you are keeping your records up to date regularly, you would spend a maximum of 15 minutes a month. Doing your administration.
That's not too bad at all, really, is it?
Not bad at all. I mean, it definitely beats sitting down with an Excel spreadsheet and trying to work stuff out.
Everybody wants that. So for those people that might be with us that aren't clients, there's some things that people can take away as well, right? So what do you think you could give people that are probably thinking about joining Crunch?
I suppose you have to think in this day and age that everything is modernizing, everything is technological now, everything's going digital. So why be stuck in the past using archaic methods when actually you could move on to something that is going to change for everyone? It's just it's a rule that is going to come into place. Everyone's going to be expected to use digital software eventually. I mean, the main thing I suppose I could give tips for in terms of understanding where you as a business are is, first of all, have a business bank account obviously set up for your company so that you're putting your client payments into it. What I would then highly recommend you do is setting up a savings account alongside that. Now, that literally is just going to be for putting your tax liabilities in, because then if you use software like Crunch, you can easily determine, right, this is the main business bank account that I'm receiving my money in. This is my savings account. So all you effectively are doing is touching the money in the business account, but not touching the tax saving until you actually have to pay.
Yeah, that's really going to help you come the end of the year, right?
Absolutely. You just know then, right, this isn't mine. This isn't my money. This is my money. I can play with this money.
Good stuff.
You also have to have a PAYE scheme. Not a lot of people know about this because it's a little bit of a myth in the sense that if a lot of people think that I'm not taking salary from the business, therefore I don't need a PAYE scheme. That's not true. You have to have a PAYE scheme. HMRC regulations stipulate that they need what's called real-time information. So even if you take zero, HMRC expect to see that zero. So you have to have that. So again, if you're not a Crunch client and you have got a limited company and you haven't set up a PAYE scheme yet, do it as soon as possible. As soon as possible.
And all of that stuff that you described, we can do, right?
Yeah, we do everything. We would actually register you for PAYE. We'd set the scheme up. We'd set up your payroll runs. We would file the real-time information with them. So in reality, actually, if you use us to do that, all you're going to end up doing is paying yourself.
Yeah, brilliant.
That's it.
That's the best bit. Right, so that's kind of the main kind of content, I think, that we've gone through. Before we jump into the Q&A, one good thing that's good for everybody is going to be to join Crunch Chorus. It's an online community where you can get access to all sorts of white papers, business guides, discounts on Crunch services. We do meetups really regularly where you can meet like-minded people, share ideas, things like that. So jump onto crunch.co.uk/chorus, sign up there. It's a benefit, like I say, to anyone, client or not. This is the list of recommended reading. We're going to send everybody a link straight after the webinar or shortly after the webinar, so you can click through to those. They'll all come out to you as well. But finally, hopefully we've got some questions. Hopefully you guys have been sending in some questions. So let's have a quick look and see what we've got here. Regarding expenses, if they're copied to Crunch, can I get rid of the original?
No, absolutely not.
Always best to have a hard copy,
always
right?
Keep the original. I mean, Crunch, if you are going to do it electronically, you can upload the receipt alongside the expense itself, but it is always best. You don't have to have the paper one, as I say, you don't have to, but as long as you have a copy of it somewhere,
yeah, sure,
absolutely fine.
Okay, sure. Here we've got, what if I stop using Crunch in the future? I'm assuming this is maybe in relation to like data. Maybe?
Oh, yeah, possibly, yeah. I mean, if you do ever want, if you are a Crunch client already, or you do become a Crunch client and then move on elsewhere, we would actually export all of your data that's in the account. So if you did want to move on to somebody else, perhaps a more traditional hands-on accountant, maybe, we will provide all of that to your new accountant.
Okay. One about corporation tax and personal tax. Does it make sense to keep personal and corporation tax aside in the business bank savings account?
No. What you want to do, as I mentioned, is separate business and personal tax entirely. You don't want to blur the line between the two, because that's when you tread in pretty dangerous waters. You want to have a personal savings account for your tax liabilities, for your self-assessment, but you also want to have a business savings account for your business tax liabilities.
Okay. Again, back to expenses. How do expenses reduce my tax?
Well, certain expenses do actually offer you corporation tax relief, which is why it is so important to keep your records up to date. Because if we're producing your year-end accounts, we will only be able to account for the data that is present within the system. Now, if you've forgotten perhaps to enter some expenses, say, for example, flip back to maybe you forgot your card for a week, and let's say you forgot to enter those expenses for a week, you could actually be losing out on quite a lot of corporation tax relief. So you have to keep your records up to date, or you'd end up paying more than you need to.
Okay. What else? Okay, I've got another one here. Pretty general one. What's the maximum dividend that I can take?
Again, again, you know, the 7.5% threshold is 34,500. You know, that's true. You know, for most, but it really is case by case. There's lots of different things that are going to impact the maximum dividends that you can take. So if you do find that you're unsure, if you think, you know, is this external income going to affect it? I've got a little bit of rental income. Give us a shout, speak with an accountant, and they can determine, right, this is what you can take as a maximum. Okay, great. Look, we're just tipping into the half an hour mark now, so I think there's still some questions that we haven't answered, which we will get back to all of them and give a summary of everyone that's attended today. So thank you to you, Luke. Thank you, everyone that joined. Make sure you follow us on Twitter, on all of our social channels, and join that Crunch chorus. And yeah, we'll be doing another one of these soon. So hopefully we'll see you at the next one. Cheers. Thank you.
Bye.